Let's go.
Welcome to Momentum Monday. Today is March 5th, 2023. Howard, what's going on?
Just an old man. I'm in Chicago, boy. I don't know how people do it. It's cold.
How cold?
This is not a it's not a knock knock joke, buddy. Can you? I'm seeing your screen. I don't know how good my Wi-Fi's okay. Why don't you take it away and get us going?
Yeah. So the S&P and the Nasdaq 100, both of them tested the 200-day moving average again last week as interest rate perked up. At some point, the 10-year yield went up to like 4.1.
Yeah.
And on Thursday afternoon, Friday, we had a humongous bounce. Both of them are back above their 20-day moving average. Small caps did a little bit better. They didn't even go to their 200-day, also reversed. So definitely a big change of character on Thursday afternoon. I don't know what the reason is. Interest rates pulled back a little bit. The US dollar pulled back a little bit. And it could be like seasonality. I don't know, but definitely a lot of buying on Friday in various sectors and cloud stocks that are the most sensitive to interest rates led that rally on Friday. And what wasn't just tech, we also saw strength in basic material stocks like oil and metals and energy stocks perking up. So it's very interesting. So many different sectors, so many different industries showing strength as of late. Look at these big blue candles on the basic materials. That's a lot of distribution. Not distribution, accumulation. In the past few days. So it seems like the stock market is saying that it doesn't see a recession this year, even though the bond market, the inverted yield curve, is saying there might be a recession later this year. The stock market is saying the opposite, because when we saw the interest rates perking up earlier last week, basic materials led, and then on Friday when interest rate pulled back, we saw technology leading. So basically, we're seeing that rotation and stock bouncing. And keep in mind that interest rates over is still high, still going higher, and lately, every time when the Federal Reserve member speaks, the market kind of pulls back, shakes people out. So I wouldn't be surprised if we see something similar next week. I think Powell is speaking this week as well. Tuesday.
So you're obviously still just high cash and just so very selective.
So I open a few swing trade positions on Thursday, Friday.
Yeah.
Definitely not just cash overnight. So I have a little bit more exposure, but I would just hedge if I see the market reversing, especially below Friday's low. It's really easy to hedge with all those zero date expiration options. You can just put 1% of your account in SPY or the QQQ options expiring that day. There will be a big speech or big event just to hedge. It's not that hard.
Yep. I've listened to, I'm quiet because there's not much happening, right? Like people are rushing into the bonds here. The 10-year has kind of gone parabolic. So, but at the same time, we remain inverted. So it's like not a lot of confidence, and there's reasons why, it's, the war, China, TikTok, everything's a negative in tech, like AI, everybody's like doom and gloom, obviously in the wrong hands. AI will be, cause a lot of commotion around, fake news. But the main fact here is just this is a new phenomenon of higher interest rates, and they're just going to stick around longer than people think. The market is still trying to digest this. The market, is just what, flipping around the 200 day, and it doesn't feel like there's any reason to panic. But at the same time, every time people lean into the market one way or the other, they're getting whipsawed. And that's because it's just not a lot of growth out there. And we've gone through hundreds of earnings reports and no one's lit it up. So, um, I look at a couple of the ones that are working, Axon that we've talked about for a long time, which is Taser on the tech and cloud side, and then you've got First Solar now finally breaking out for real. Could have something to do with China playing ticky tack around solar, chips, and then the metals. Know so little about them, and the industry they still continue to base and do well. But anything high growth that worked over the last 10 years continues to just, puddle along and really struggle. It's kind of like one step forward, two steps back. So I think you just got to continue, boring, but you got to continue just being really careful and take advantage of. There's still not enough people taking advantage of the fact that they can get 4 or 5% in a money market. I talked about one of an investment I have in Max My Interest, which just connects to your bank account and pushes your money across internet banks to the highest money market account. People people called it a scam, and I'm like, meanwhile they're trying to make 300% in farming shit coins. So, while people are suspect of like simple APIs that just go out and get you money market rates, they continue to speculate on stuff that's going to get their ass kicked. So I think when you see that and you see the fact that people, although they talk bearish, are still very heavily invested, um, you know, I think it's just going to be tough in the stock market. But as I showed you, as we see with Axon and with First Solar, there's stuff that's working, and the
Yeah,
metals
absolutely. Yeah.
look like they could go. The oil service stuff, again, I know nothing, but I'm just looking at the price action. The oil service sector looks ready to go higher, and so there is stuff that's working. And so for pure momentum investors, there is stuff setting up. But the fact is, you're high cash. I'm pretty skeptical, and it doesn't seem like there's a rush to do anything. And so, what are you doing with your day? Are you just still doing the same process?
Yeah, the same process. I typically have 3 to 5 names that I know I'll be watching for the day to potentially just swing trade or just take a short-term trade on
Yeah.
any of them. And on Friday, one of the stocks I was watching was AI. I knew that they were reporting earnings, they were gapping up on big volume, and they offer an opportunity to trade it intraday. I mean, obviously AI is a very hot market theme right now. Maybe this company doesn't even have a proper AI product, but because of their hot ticker symbol, and I mean, they don't have any growth. Look at it. Like, they don't even
I
have
don't even know.
growth,
Only you can know that. Like
but
the
just mentioning AI, just like
yeah.
Nvidia did, that's enough to have a 30% gain on their earnings day. And Nvidia was the same thing. They had a horrible quarter, and the only thing that saved them is that they mentioned AI.
No,
Uh,
but the machines, like the machine makers and the chip makers that are associated with AI are the best positioned. So AMD, NVIDIA,
yeah, AMD and Nvidia,
that's why
those
the
two.
dips are
Yeah,
getting bought.
yeah,
It's a valuation question, of course. Um, but I'm seeing a lot of pitches. Obviously, I talk to a lot of. I don't do AI investing, but I have a lot of friends that do, and a lot of deals are getting done. In my industry, that just means that if you were in the previous hot sector, and I'm not, but crypto, DeFi, and your companies that you funded are not hot, there is going to be some the money has moved on, and it's a show me type of market in my world. And so there's a lot of pain still to happen in my world. The stock market, this is a great time for people to at least start learning and educating themselves about stock market, whether it's technical analysis or fundamental analysis, because prices aren't as volatile as they were, in the growth boom. So there's a real chance to kind of dig in and learn. Obviously,
Yeah,
indexing as well. So, 2021, 2022, the bubble and then the burst in 2022 in tech and growth kind of just, at least they happen. Now we got to get back to cleaning things up. And you're seeing the after effect of that, right? Like the markets are acting pretty good, all things considered. And Europe is still, because they have very, it's in more manufacturing and industrial in their indexes, continues to lead here now.
yeah, definitely. I mean, Europe is
France is
definitely
almost at an all-time high.
Europe is
Nothing
behind
happens in France.
fighting inflation. Definitely, they're 6 to 9 months behind. So we'll definitely see some more repercussions there because
Yeah,
later in the year or maybe next year. But yeah, technically looking stronger than US. You can even see the last 2 days
yeah. So relative
simulations.
strength still there, probably because of growth, because less exposure to tech. But right now, I'm gonna trust, verify. I'm asking a lot of questions before I do anything. You know, the so I think, to beat a dead horse, we'll come back next week. We'll take a look at everything, but not many companies look great in the industries that aren't sexy continue to kind of coil and get some accumulation. The dips keep getting bought. So I think people are expecting more of the same, rates to stay high, um, or higher than they've been. And, caution is, it's, caution is warranted. But at the same time, there's some setups. So,
Yeah,
we'll,
definitely. There is a growing number of setups, and as we said, in various industries, in some very weird places, like even coal near all-time highs, and
wow.
um, like look at this one, LW. I think they sell frozen potatoes to restaurants. So there's some very weird
What's
sectors,
the name of that
industries.
company? What's the name of that company?
Lamb Weston.
Wow, that's interesting. Yeah, I'm in Chicago talking to some people in that industry. Didn't notice that. Yeah, so middle America, the flyover states, we're in, um, where manufacturing and other industries happen, not on the coast, is kind of, it's a reminder it's a big country and there's a lot of industries that are not in the go-go sectors, but there's plenty of ways to make a buck if you look. And one place to look is that 52-week and all-time high list. And it's showing a lot different type of names. All right, buddy.
Yeah.
So have a good week, and we'll check back in next week.
All right. See you next week.
Here, buddy.